Hey VV Nation, all of YouTube, what's going on? It's Patrick with VectorVest back with you once again with another part of our technical analysis series. Last time we talked about Bollinger Bands, which shows great overbought and oversold conditions in a stock to help you maximize your gains and help you lock in your profits. And we're going to stick with that same theme here today and take a look at another indicator that can do a similar thing and show you overbought and oversold conditions. So if you're ready to see which indicator that is, make sure as always, smash that like button, subscribe if you're not already subscribed, and let's jump right into it here today. All right, welcome back. So today we're going to be taking a look at envelopes, which is an indicator that VectorVest actually uses in one of our key market timing systems, the DEW, the E of the DEW obviously standing for envelopes. So if you want more on that, make sure to check out some of the previous videos that I've done showing the market timing system here on our YouTube channel. But let's start off with what are envelopes. Envelopes are a technical indicator that are typically plotted over a price chart with an upper and lower bound. The upper and lower bound, similar to what we saw at Bollinger Bands, show extreme overbought or oversold conditions in the price. The most common example of envelopes is a moving average envelope, which is what we're going to be talking about here today, which are created by using two moving averages that define upper and lower price range levels. So this is a little misleading. Essentially what it is, it's based off of moving average, which the most commonly being a 20-period simple moving average, and then raising that moving average and lowering that moving average by a certain percentage, which the most commonly used is a 5% move. So getting into the key takeaways here for envelopes, they're a technical indicator that refer to trend lines once again plotted both above and below the current price. And envelopes' upper and lower bands are typically generated by a simple moving average and a predetermined distance above and below that moving average. So once again, the most common industry standard is a 20 simple moving average or 20-day simple moving average and a 5% above and below that point. And many traders react to a sell signal when the price reaches or crosses the upper band and a buy signal when the price reaches or crosses the lower band of the envelope channel. So here we get into talking about how envelopes work. And just like we talked about with Bollinger Bands, these strategies are really based upon a mean reversion principle, meaning that whenever the price gets above or below that band, that they tend to revert back to the mean or come back towards that 20-day simple moving average. So if you're looking for a time to take your profits when it breaks above that upper band, that's a time that you want to start tightening up your stops and consider locking your profits in, because most likely price will start reverting back to that mean or the 20-day simple moving average, aka pulling back. Or if you're looking for a new entry when the price goes below that lower part of the envelope, then it will typically revert back to that 20-period simple moving average or move higher once again, giving you a nice trading opportunity. So with that, that's really going to be the main gist of what we're seeing here with envelopes. So let's go ahead and jump into the VectorVest 7 software and get started here today. So we'll get out of here. And as always, we start off in the VectorVest 7 Unisearch feature, which is our scanning capabilities. And we do have the ProTrader folder once again, which is an add-on feature using the ProTrader add-on tool, which allows us to create technical scans at any point with any indicators that we have available. So if we open up the ProTrader folder, we scroll down a little bit, we actually have some predefined envelope searches already. And we have a bearish search, so the envelopes when the price crosses below the upper range or the upper envelope. And then the positive or bullish envelope search, which looks for price crossing above the lower envelope in the last 1 day. So as you can see, the default settings for this search are 6% offset with a 50-day simple moving average. But we're going to stick with the industry standard to keep it simple for everybody out there. So we're going to adjust the search by clicking on the value box for the envelope parameter here. We're going to change this to a 5% of a 20-day simple moving average or just simple moving average MA, not exponential, not weighted, just simple. And then the price is going to be crossing above that lower envelope within the last 1 day once again. So we say, okay, I'll go ahead and just run the scan. And we get 5 stocks shown up here. I'm only displaying the top 5 just to make it easy for everybody out there and give you guys a few examples. And so now we'll click on the graph all feature at the top, and up comes our first stock. Now, if you notice here on the left-hand side, it's set to the 50 and 6, which were the other settings for that search that we just looked at. So to customize it, all we got to do is simply right click on the box here and go to change the settings. And then we'll change the period back to a 20 and the offset down to a 5. Say OK. And as we can see, Murphy's USA, petroleum has been one of the hot industries of 2022 so far. And we can see here, we kissed the lower part of the envelope and got a green up day as of the prior day, which overall in the market, if you're not familiar, was a big down day. So seeing petroleum getting a little bit of a pop when the rest of the market is blood red, not a bad sign. Now, let's go ahead and add that simple 20-day moving average to give you guys a better visual of what we're looking at here. So I'll right click on the price box, go to add moving average, simple, simply select the 20 and add it on here. So we have our 20-day simple moving average, and then 5% above, we have the upper envelope, 5% below, we have the lower envelope. So looking at some historical data here, we can see, looking all the way back at March, we had the price of Murphy's USA dip below that lower part of the envelope, ran up, stayed above that upper part of the envelope for quite some time, then started coming back down, reverted back to the 20-day simple moving average, bounced off, stayed in that upper range, but then came tumbling back down, broke down below the lower envelope, and then had another big rally. So now we're seeing it coming back down, riding the lower part of the envelope, and we're waiting to see positive confirmation. As always, these aren't stocks that we're recommending to buy right now. These are just examples, and you should always consult the color guard before ever investing into any stocks out there in the market. Also, by the time we do get an opportunity to tell us it's okay to be buying, we should always update the scan by rerunning it at that time to see the most up-to-date candidates to get the best performance in the market. So looking at Murphy's, we can see decent opportunity here, pulling back right now, not quite showing signs of a rebound. Saw positive signs yesterday, but no real follow through as of yet. So therefore, one to keep an eye on at least. Moving on to the next one, DK. We can see broke above the upper part of the envelopes back here about a year ago, came tumbling down up until about the beginning of the year. When you got outside of that range, you were looking for some bullish signs here, possibly the big up day. Got a big run, pulled back, another opportunity, big run, taking profits there, big run, taking profits there. Didn't quite get there to the lower part of the envelope at that point, but you see another big opportunity. So this is great for short-term traders looking for extremes, looking for, once again, that reversion back to the mean, or looking for stocks that are oversold and looking for them to snap back and move higher, giving you some quick opportunities to make some money. Now, looking at DK right now, hit that 20-day simple moving average, gap down here as of right now, pre-market it looks like. So therefore, this could be an interesting one to keep an eye on. Maybe not getting into it quite yet, but definitely keeping on our radar. And then last but not least, PBF, another energy stock. Once again, petroleum energy has been one of the best industries of 2022 so far. We can see some great opportunities here where you can take advantage of these trends, these short up and downs, back and forth, taking advantage of the stock as it moves higher to the upside, then playing it to the downside. Or if you're an options trader, you could use some defensive actions such as buying a put as insurance or other types of trades such as that. But you see some great opportunities, and it really does highlight the extremes here in price. Now, I will say this though. When you look at envelopes and compare them to Bollinger Bands, personally, I prefer Bollinger Bands. I like the fact that they're based off of the standard deviations rather than just a simple percentage. But everybody's different, so I want to make sure you guys see other varieties of indicators that can also help you. Because if you're more comfortable with these over Bollinger Bands, for example, then you should stick with these. But everybody's different, so therefore, use what you're most comfortable with. Really is the best guidance or advice that we could give here. All right, so we see a couple of opportunities here so far based off of this. Let's take a look at the other side of things. Let's take a look at the bearish trades. So we'll go say no to that. We'll go take a look at the envelopes for the downside. And as you can see, once again, it's using the 6 and 50 simple moving average. So we'll change that back down to a 5 and a 20. And then therefore cross below the upper envelope in the past 1 day. Say okay. Go ahead, run the search. Get our 5 stocks. Let's take a look at them. And now here, looking at opportunities to take advantage of it to the downside. So SBEV, even when it had this big run up and it started pulling back, if you waited until it got back down inside the envelopes, you still had some great money making opportunities. Granted, you didn't necessarily nail the exact top or the exact bottom, but to be successful in the market, you don't have to. As long as you can find some decent trading ranges, you can make money in the in-between. You don't have to nail, once again, the exact tops and bottoms. So always remember that, don't try to time the trade perfectly. Make your money, stick to your plan, move on. But looking at it here, obviously at the price range that it's at, you may not be able to short it or have a hard time borrowing it from your broker. So you could always adjust the price that you're looking for, let's say greater than $10 in that Unisearch feature that we just looked at. So right here, ran up to the upper part of the envelopes, now came tumbling down, gapping down here this morning. ASAN, looking at it here, you saw it trading in the overbought territory back around a year ago. Then when it finally came tumbling down, you had a big red candle pushing it lower, continue to move lower. So when you're getting outside of that, that's when you start tightening up your stops. You don't necessarily need to lock profit in at that moment, the second it goes below or above, but that's definitely a good indication of when you should start at least moving your stop price higher to make sure that you're locking gains in. So we can see it stayed below that point, continued to gap down even more so, and still's been steadily rising or running to the downside ever since. So you did get another opportunity to take advantage of it to the downside when you broke above the upper part, saw it come tumbling back down, taking advantage, still had a great run all the way from, let's say, 55 down here till about 30. So still a great trade and can easily make you guys a lot of money out there. Moving on to the next, LAZR, another one. Had a big run up to the upside, take advantage of that. But then you started breaking down, another potential pop. You saw the pop coming in, now breaking down once again. So therefore, another great opportunity here. And last but not least, we'll take a look at one more to the downside, OMIC. We can see trading in the upper part of the range, saw a lot of weakness, saw a lot of selling pressure on that high, indicating a reversal coming in. Well, got followed through the next day. Stock continued to move lower. Saw some sideways action here, then continued to move lower. Got a little bit of a pop for the upside, then a great trading opportunity to the downside. Obviously, at 293, once again, you may have issues trying to borrow these shares from your broker to play them to the downside. But if you ever want to change that, getting into the Unisearch tool, the stock price actual greater than $1, simply click on that, choose a custom value, and let's say 10. And then you rerun the search, and now you're looking at stocks that meet your price criteria as well. You can do the same for the average volume or any other parameters you want to add here as well to help increase your success in the market as well. All right, so that's going to be it for today. Hopefully you guys enjoyed today's technical analysis coverage that we talked about with the envelopes. Let me know your thoughts down in the comments below. Is this one that you use, or do you prefer using Bollinger Bands, maybe Keltner channels? Which overbought, oversold boundary indicators do you guys prefer? Looking forward to seeing your guys' comments down below. So until next time, it's been my pleasure being with you guys. Have a great rest of your trading day. Take care, adios, and toodles.